All right, in this video, we're going to go through a real simple one. We're going to go through all three of my different investment accounts, why I own all three of them, what they all do, what I put into them, what their overall goal is, and maybe I'll talk a little bit about investment psychology as well, if you're very lucky. Welcome back to the channel, guys. So today we're going to talk about the three portfolios that I have. I'm going to show you all three portfolios with complete transparency. I'm going to tell you why I invest into each portfolio. I'm going to tell you the end goal of each portfolio, and I'll talk throughout about investment psychology, investing for the long term, red days, green days, how you should be thinking about them, and little bits and pieces like that. It's going to be incredibly boring. If you're bored already, switch off. If not, we'll get into the portfolios, have a little look at them all, and I'll talk to you about the brokers that I use as well. If you're new to the channel and you've made it this far already, then you're obviously enjoying the content. So subscribe to the channel because you'll get far more content. All the new stuff I'm putting out, stock market investing related in general. And while you're down there, give it a little like, or wait until you've seen the rest of the video and you've liked it and then give it a like because you like it. Makes sense, right? Like button, that's what it's there for. Don't forget, throughout the videos, I'll put a comment down below as well. Let me know what your portfolio and investment strategy is like, what broker you use, a little bits and pieces like that, and we'll have a little conversation about it. Let's get into the computer and we'll go through the portfolios and we'll talk about red days, how you should be feeling about red days, and your investment strategy. That'll change depending on what investment strategy you're in. And of course, don't forget, please, the difference between trading and investing. This is just investing. Long-term investing, long-ish term investing, short-term investing maybe, but not trading. We're not in and out of positions on a daily basis. So let's go, let's get in there and we'll have a look at them. Right, here's the first portfolio. We're going to start in this one because it's the biggest one. I want to keep this relatively short and to the point. Explain all the portfolios, explain why I invest in each portfolio, and then talk to you a little bit about just your red days and trading psychology as a whole. So this is the main portfolio I put into. After I've collated my disposable income, I put about 80% of that into this portfolio. This is mostly dividend and income related. I have a few travel and tech stocks and bits and pieces that I bought back in the dip. Other than that, we've got some ETFs in there. We've got some income ETFs like the Global X Super Dividend ETF. We've got REITs, which obviously pay great dividend. And then at the bottom here, we've got all these EV stocks that obviously I bought so you guys can live vicariously through me and not buy them yourself. But hopefully you did live vicariously through me because they've all done terribly. But the vast majority of them are dividend payers. It's a high dividend yielding account to a degree. It's not high, it's probably between 3.5% and 4% as it stands, because obviously we've got a lot of big tech amounts in there like Tesla and Apple, which don't pay a real dividend, while Apple does tiny. So the average yield on cost for the whole account is not massive. It's about 3.5, 4, but the vast majority of the stocks I try and invest in at the moment are higher dividend payers. This is just my portfolio. However, I have a fiance, so what's hers is mine and mine is hers. So she doesn't necessarily have access to this portfolio. And again, she doesn't watch my videos, so she's not going to hear me say any of this, but she knows and sees on a regular basis what is in it and how much it's up to and things like that, because I get excited and giddy about it. We're currently at £58,694 and we have profit of £10,600 roughly. Got about £1,158 to spend at the moment. Nothing's really tickling my fancy because I just haven't had the time to look into anything or research anything, and anything that kind of dips off, maybe a bit of Apple, bit of an ETF. Obviously I'll keep an eye on the market every now and then and buy in, so I've got a little bit of funds ready to splurge and spend. So that's that portfolio. That's the main one. I've done loads of portfolio reviews, so go and check out another video of mine with the portfolio review, the most up-to-date one, and I'll give you an overview of what all these positions are. Second portfolio. Now this is a portfolio that my fiance and I actually share. She has access to this portfolio. I couldn't imagine or tell you the last time she would have accessed it. Long time ago, I'm sure, because she just doesn't care. But I have convinced her that she should start investing. Case in point right here. That's why you should invest. Sensibly, of course. So we started out with £10 or £15 a month from her. I then went 1.5 times leverage on that and topped it up. Anyway, we've ended up at a figure of around £37.50, which has to be rounded up to £38 in Trading 212. You lot can do the maths on that. So £38 a month is what we put into this account. It's not a lot at all, but it's getting some money away on a monthly basis, more for my fiance than myself, because I've got my own portfolio and I've got two portfolios. This is more for her so that I can update her on this and say this is what the portfolio is doing. I tell her what we're buying into. It's mostly blue chips, it's mostly dividend payers, and we're just going to sit on it. We've earned a reasonable amount of dividends so far, reasonable-ish for the size of it, and it's currently 12% up, which is more than you're going to get in a bank. So it was a good decision. We'll sit on that, we'll keep feeding it, and she's already surprised it's at £1,145, which is great. So hopefully I'm just eking her into the whole investing world. But we just bought a new house, so there is no more disposable income, so that £38 into this portfolio is not going to go up. That'll stay at £38, and actually the amount I put into my main portfolio will also be considerably less now with the house. So that's that portfolio. Shared, blue chip, dividend payers. We're looking just for a sort of income really. So the other one, both in Trading 212, this is the one that you want to be a bit more fearful of. And this is where I want to talk about the trading psychology, which I'll do in a minute, but I'll give you an overview of the portfolio first. So these are penny stock, small cap, highly volatile, highly risky, don't pay dividends. Is there going to be any return on your capital? No guarantee. It's one of those. Now the small cap stocks more recently have been doing poorly, very, very poorly. Now you'll recognize a lot of these names as well. So we've got Binano, we've got Churchill, we've got Gores Holdings, if you know that, Jaguar Health, Palantir, Tesla, Zomedica. Anyway, this one is 15.74% down. Did I buy all at the wrong times? Possibly, probably. Not the point. The point I want to get across is these are highly volatile, small cap, penny stocks. Generally don't, well, there's a few that aren't small cap. I've got Tesla in there, I've got Airbnb, I've got PayPal. But this was my try and beat the market portfolio. It's currently not. And what I wanted to say to you is I've invested £3,114 in this portfolio so far. Now, this is my play money. I invest 20%, 15 or 20% of my disposable income. I've already paid the bill, stuff like that, and got money to live on. The rest of it, I get 20% into this portfolio. Does it matter if I don't get that £3,114 back ever? No, not at all, because that's not the point of it. So what I'm saying is you'll see a lot of these videos on YouTube of this stock's going to 10x, good time to get in. I'm sure there are videos on YouTube for every single one of these stocks somewhere. Some of them I've done. I'll hold my hands up to that. Gores, Holicity, Azia, Jaguar Health, Mustang Bio, Palantir, and there'll be videos on every single one of these somewhere on YouTube saying how they're all going to 10x, and look at them now. Anyway, that's not the point. What I'm saying is if you go into invest in companies like this that are small cap, highly volatile, very risky, you need to be investing money that you can say goodbye to, that you don't need. The £3,114, I do not need it. If that suddenly goes to 6,000, great. If it goes to zero, am I going to lose sleep over it? No. I have another portfolio here that's doing very well. I have another portfolio here that is doing reasonably well, and we'll keep adding to that. So back to this one quickly. Am I going to be worried if I lose this money? Absolutely not. And this goes for, over my time, I've invested in sort of startups at second, third, fourth round of funding. The website that I use is Seeders, and another one, but I can't remember for the life of me what it's called. And I've invested in 4 or 5 different startups, one of which was a healthy-ish chunk of money, and it folded. Here's what it is, part of the investing game. If that money had turned into 25 grand, would have been lovely, but it didn't. I've lost it, gone. Does that bother me? No. Do I lose sleep over it? No. Would I lose sleep over this? No, absolutely not. So what I'm saying is you'll have red days. Don't have a red day, sell out of it if it's a company you truly believe in. If you're worried about that, a big red day, and you're gonna quickly sell out of it, don't be investing in these highly volatile stocks, because they will have crazy figures like 41% down, 44% down at times. If you're worried about that, and you think you will probably just pull out at some point, get into an ETF, keep plowing your money into it, follow the market, the overall market, let it do its thing. This is a highly volatile portfolio. It's not doing very well. It doesn't bother me. And hopefully you kind of take something from this, and I'm sure there'll be people out there that see these videos with the quick wins and they get in and it doesn't work for them. Don't listen to them. You might have somewhere you have a quick win, great. But if you're serious about investing, it's got to be for the long term. And if you're serious about investing and you're just starting out, get into something like this, which is a Vanguard ETF. Job done. Nice and easy. Little rant over. Just wanted to show you the portfolios, show you my thoughts on them, what I put into them, and give you a little bit about investing psychology. So that's it for in here. Hopefully that wasn't too boring. Hopefully you got something from that, and that's kind of helped you in some way get your head around investing, the mentality of investing. It is risky, you can lose your capital, but if you diversify enough, certainly if you're a beginner, then there is some very good to be had in it as well. I'll leave that there for in here, and I'll see you out. So that's it. Hopefully that wasn't too long-winded for you and you made it through. If you're still with us, then great. And you should be subscribing to the channel because there'll be loads more coming out. Check out all my old videos as well. Like the video because it helps it, obviously. Comment below. Let me know what you're getting into next, maybe. What broker you use. Question me about IG because loads of people question me about IG. Why I use IG and not just trading 212. Don't like it. That's why. Although I do use it, but not in my main portfolio. And hopefully you got a little insight to investing psychology in red days and how you should be feeling about it and bits to do with that, I guess. All very boring stuff. We're not talking about hype stocks today. We're not talking about the next best buy that's going to go up, this, that, and the other. Tip ranks reckons are going to have a 60% upside in the next 12 months. No, just a nice simple video about my portfolio. It's simply it today, all my portfolios and why I'm in each individual one, and with complete transparency showing them. So hopefully you enjoyed that video. If you did enjoy the video, give it a thumbs up and join me for the next one. I don't know when it'll be, but I'll see you in the next video. See you later.